Hey, Bulls and Bears, back with another dose of financial economic news. It is Friday, January 27th, 2022. Folks, we've got a lot to get into, but let's get into the numbers now from this latest GDP print. And there are comparisons now being made to the Great Depression. Let's talk about what that means here. Now, the gauge that many people look at as far as the economy is GDP, that stands for Gross Domestic Product. One of the big flaws, and there's many, but one of the big flaws in that number is that it's mostly consumer spending. So if a bunch of people go out and take on loans and run up credit card debt, that's going to look like a positive thing in the GDP number. So just off the bat, I just want to let you know that it's not a very good statistic, but it is a statistic that a lot of people look at. So we'll report on it. But as we report on things, we also have to point out the flaws and how these things really are not indicators, real good indicators of the economy. But if you look at the same statistic going back a few years, it can give you an idea in general of what's happening. Now, if we go back to this chart down here, we see that GDP in the last quarter, the fourth quarter 2022, GDP rose 2.9%, and that was better than expected. But keep in mind, this is consumer spending. So what do people do when costs are higher? Well, they have to spend more, and that's going to look like also a positive thing in GDP. So you could see how the GDP can really make bad news good news as far as this goes. About 70% of it's consumer spending. You also have government spending in there, which increased almost 7% in that quarter. So those are two things that really are not helping people. It just means people are going into more debt. The government's spending more money. Now, if you look at it compared to the third quarter, that was 3.7% in the third quarter. So even looking at the numbers here, I mean, we've decelerated. And then we go back to the first and second quarter of 2022. We know those were negative, and that was the recession that was not a recession. Remember, they changed the definition of a recession. But there's another statistic that not too many people are talking about, and that's the drop, the massive drop in disposable income. In fact, last year, the calendar year 2022, we saw a drop in disposable income of $1 trillion, over $1 trillion. And why is this? Well, we have rising rates. People are depleting their savings. They're pulling money out of their retirement accounts and 401k to keep up with the cost of living. People are running up credit card debt like never before. So all the spending gets chalked up as positive economic growth. But if you look at the flip side of it, disposable income has basically crashed to the worst since about the Great Depression timeframe. And I'm not just making that up. Take a look at this headline. All right, this one's out of Fox, but there's numerous outlets out there talking about this drop in disposable income, but just not many of them put it in a headline like they did over at Fox Business. GDP report reveals ominous Great Depression warning not seen since 1932. Now, many people may say, JJ, doesn't look like the Great Depression out there. I don't see people waiting in soup lines, and I don't see, lines around the block for food. Well, what I would have to say to that is you're wrong, because one, if you look at these food lines at some of these food banks, they are around the block. In some cases, they're miles long right here in San Diego and other places we've talked about here. But also, soup lines aren't really a thing anymore because now people have the plastic card that they can swipe. So, of course, it's not going to look like the Great Depression. Things are a lot different nowadays. But if you look at the financial despair out there, I think people are worse off now than they were during the Great Depression. And back in the Great Depression, people were more self-reliant. More people grew their own food. And if they didn't grow their own food, they had a neighbor or someone nearby that did grow their own food that they could trade for. And if you didn't have any tangible items to trade for food, you can maybe do some labor for food. But see, we don't have to do that anymore because we have the plastic cards that we can swipe and go into debt, which makes GDP look better. But on the flip side, we have these other numbers crashing, disposable income crashing, the personal savings rate, the worst that it's been in decades, people depleting their savings and running up debt. We're not getting out of 2023 without a noticeable financial collapse. Now, I think the collapse has already started because I think most of us here will agree, we've been paying attention to what's happening. We've been looking at these numbers for a while, and they continue to get worse and worse and worse. But 2023 is going to be the year where even the average Joe, even those in denial are going to have to face reality because it's going to be on their front doorstep. And the job losses are just getting started. We've got more major layoff announcements here. Let's take a look at a couple of these reports. And here are more big layoffs. So we've got IBM out there laying off about 3,900 people. SAP, it's a big software company in Europe, I believe. Big layoffs. And it seems like we can't do a report now without some new layoff number to have to report on here, right? And you may look at any one of these and say, well, that's not many. That's just a few thousand people. But folks, these are happening nearly every day. I check the news. There's more layoffs. And folks, we've been talking about this for a year. We've been saying for over a year, we've been saying that the declining savings rate is going to lead to these layoffs because as consumers have to pull back on their spending, then you're naturally going to see layoffs. Nobody questioned in 2020, 2021, when all the jobs were available. Remember the labor shortage, so many jobs out there. Nobody questioned that and how that was unusual or abnormal. Well, now we're seeing the flip side of that. What goes up comes down, right? So all these jobs available are now going to be, nobody's going to be able to find a job by the end of the year. So we're looking at a drastic turn in the economy here, and it's going to be rolling out every day as we document it here. It's not something that I'm going to say, oh, it's going to be here next month, next year. It's here now. You just have to pay attention and see the writing on the wall here. Now, I was at one of my local grocery stores here recently, and I recognized somebody that was working at the checkout, and it was somebody that works at one of my kids' schools. So we have a teacher's aide also working now at a grocery store, and I was talking to her for just a couple of minutes because I recognized her, and we are just talking about the economy, how a lot of people have to work two jobs, and I wasn't, criticizing her at all. I was just saying, yeah, this is almost the new normal. People have to have more than one source of income. And it's just interesting if you look back through history, back in the 60s, 70s, even the 80s and 90s, a lot of people could get by on one income. You could raise a family on one income. You could buy a home on one income. And I remember my parents telling me in the 90s how they paid off their home early. They made extra payments towards the mortgage each month, and they paid it off like very early, like almost 10 years early. And that's not the norm nowadays. Now the norm is not only not paying it off, but refinancing, setting it another 30 years, refinancing again, setting it another 30 years. Now, that was with falling mortgage rates or lower mortgage rates. Now, it's not going to be so easy for people to keep kicking the can down their road, their personal finance road. People can't kick the can down the road as easy as, let's say, from a federal perspective. From a federal perspective, nationally, they just keep on increasing the debt ceiling, and people are asking, why is there even a debt ceiling? In fact, there's a bill out there right now. They're trying to even get rid of the debt ceiling, so we don't even have to negotiate it on this national budget debt ceiling. So we see how this works, right? The powers that be, they can spend more and more and more and more, but you don't have an unlimited credit card. Eventually, households in the U.S. here are going to have to face the reckoning that the credit card company is not going to give them an unlimited debt ceiling, and that's where we're headed to. And I think also this year you're going to see credit card companies really start dropping the credit limits on credit cards. We actually saw that in 2020 at the very beginning. Remember, there was a lot of uncertainty at the very beginning. People didn't know how long the lockdowns were going to last. They didn't know the health crisis, if it was going to spread, if it was going to be gone. So there was a lot of uncertainty, including banks. They dropped credit lines very quickly during those times. When the late payments really start to increase, and they are going up, but when they really start to spike, I think this summer, going into the fall here, 2023, that's when we're going to see the credit card companies drop these credit limits very drastically. And then that's going to be basically financial Armageddon for a lot of households, because why? People live off their credit cards. Like we talked about a few minutes ago, the soup lines, swiping plastic is the new soup line. This is food on people's table. If they can't swipe their credit cards, you're going to see a lot of desperate people. We already see crime increasing now in so many areas. It's going to get even worse this year in 2023 as people can't buy food now. Their credit card limits get slashed. They're going to resort to other ways to get food. And that's why we have to keep stacking here. I say keep stacking, keep repairing both food, of course, other preparations. You need to keep yourself safe. I still think silver is going to be a good thing, maybe to barter with. But two, the next financial system is going to be gold and silver backed, in my opinion, including other precious metals. We look at what's happening with a lot of other countries right now. They're reintegrating hard assets and gold and silver into their trades with other countries. They're trading outside of the dollar. We talked about the U.S. dollar being under basically attack. Saudi Arabia is now doing oil trade outside of the U.S. dollar. Right, so that's going to be another, I could say, nail in the coffin. It's going to be another inflationary force with the declining dollar, with all these other countries ditching the dollar on top of everything else here, the job losses, the rising rates. We've got still an ongoing health crisis. I've never talked to so many people that are sick and sick for long periods of time, for weeks and weeks and weeks. And even myself, I had to do this juice fast. I talked about it yesterday. Today I'm on my day 3 of my juice fast, and it's been very rewarding so far. I mean, I feel a lot better. I feel a lot more alert as well. But I don't think it's going to be sustainable to just do juice for that long. But it is kind of a reset here, and I think a lot of people need to really start focusing on their health, because what's coming here in this economy and financially to a lot of people is going to be very difficult. But if you add on top of, if you add ailments on top of that, or health issues on top of that, on top of this financial turmoil that so many people are going to see, that's going to be even worse. Because even if you're broke, as long as you have your health, that's still a very big thing. If you have your health, you could go out and maybe work a little harder, maybe relocate. It takes a lot of energy and time to relocate too, especially from one state to another. And you don't want to be in very sick condition to be able to do that. Relocating, you don't want to be sick and bedridden. Obviously those things don't go together, relocating and being bedridden, right? So the obvious, folks. But let's go ahead and get into another story here. Let's talk about Walmart. Walmart's raising their minimum wage. The average raise, or the average wage, not raise, wage, is going to be $17.50 at Walmart. The minimum wage is going to be $14. So the average $17.50. So why is Walmart able to do this? Well, one, I think they have to attract workers. But another reason is a lot more people now are shopping at Walmart. Remember, people that used to shop at more expensive stores are now shopping at Walmart because of the plunging savings rate. All those people that used to shop at Bed Bath & Beyond, Bed Bath & Beyond's going bankrupt, by the way, but they're now shopping at Walmart. People that can no longer afford Target and other higher-end retailers, it's weird saying high-end with Target, but definitely more expensive than Walmart. Those people are now, more of them are going to Walmart. Right, and this decision that Walmart made is without any law requiring it, right? So they didn't raise the minimum wage in every state, but yet Walmart's deciding to still raise the minimum wage because they need workers. They want to attract workers, and that's how it should be. That's what the free market does, if there is a free market. I mean, some people say there's no such thing as a free market, but every once in a while you get a little glimpse of the free market. So when there's a labor shortage, that's in itself is going to demand higher wages. All right, so I guess a little good news, if you want to look at it as good news, Walmart raising minimum wage. We're going to go ahead and wrap this up, folks. Hope everybody has a good Friday today, and we'll see you here on the weekend. I'll be back with another report, another update. Thanks, everybody, for being here. We really appreciate your support. Thanks to DJ Jojo for your support. Really appreciate that. Also, thank you to Sue Oni. That's Sue O-N-Y. I think that's how you pronounce it. And Maria Rivero. Thank you once again. And everybody, have a good weekend. We'll see you soon. Keep stacking. Bye for now. Peace.